Hi believers, this is Amit from Waya team, and I'm here to provide our weekly bite and the road ahead in the markets. The Indian stock market experienced heightened volatility due to US tariff led trade war jitters. However, a sharp rebound after the 90-day pause on US tariffs helped trim losses, ending the week with modest decline. Nifty fell 0.33% for the week, while broader market, represented by mid-cap and small-cap indices, ended flat for the week. The highlight of this week were the major swings in all the asset classes globally. As the week started, everything everywhere was crashing all at once. By the end of the week, almost everything managed to recover. The sharp swings in the market were largely driven by escalating global trade tensions following the US imposition of steep tariffs on several of its key trading partners, including China, Europe, and India. In the retaliatory move, China imposed tariffs of up to 125% on the US, prompting the US to escalate duties further to 145%. Such massive volatility and swings haven't been witnessed since the pandemic. As of latest update till yesterday, Trump has also exempted all electronic good from tariffs on China. China electronics account for majority of the USA trade deficit. The whole event seems to be increasingly targeted towards China, and US seems to be eager to make a deal with China. The US has pretty much backtracked on tariffs and paused them for next 90 days, during which it is widely expected that they will strike trade deals with major nations including India. But then markets would have to go through 90 days worth of humongous uncertainty. In US, despite the 90-day pause, the fact that there is a baseline 10% tariff and other tariffs such as those on the autos remain in place is not a good scenario. Recession risk is much higher now than it was a couple weeks ago. Investors are cutting stock holdings and buying more investment grade sovereign bonds as tariffs threaten to slow down the entire global growth. In currency market also, the US dollar too continued to slide against major currencies on Friday as the back and forth over import tariffs shook investors' confidence. The dollar has been hit hard by a global sell-off that spread to stocks and even to safe haven like US Treasuries. Coming to the Indian market, the major event past week was the RBI rate cut of 25 bips. With inflation under control, market expected further 25 bips in the next meet, which is a good development. We expect inflation to moderate because of cooling food prices, allowing the RBI to cut rates further. The Indian stock market has entered the result season with a subdued expectation. The initial results from the IT major acknowledged the impact of trade tensions and expect a delay in discretionary spending. In the coming week, there will be a lot of noise, but the only major event to focus from here on are Q4 FY25 earnings. Expect earning growth to narrow with fewer companies beating estimates, and as such, any rally is limited to such names only. India's factory output, measured by the Index of Industrial Production (IIP), grew 2.9% in February, sharply lower than 5.2% growth recorded in January 2025, reflecting a broad-based moderation across key sectors. Growth in the manufacturing and mining sectors eased to 2.9% and 1.6% respectively in February, compared to 5.8% and 4.4% in the previous month, that is January. However, electricity generation remained a bright spot, rising 3.6% in February, an improvement over January's 2.4%. Primary reason for the slowdown is the global uncertainty, which continues to cast a shadow on both the private investment and consumption. Nifty 50 has managed to defend the key support level of 21,900, which has been held on multiple occasions over the past 1 year. The current strong recovery is supported by positive divergence on weekly chart, which indicates that the bottom is in place given the current news flow. We also believe that the index has undergone a base formation while absorbing a host of negative news and set the stage for next leg of up move towards 24,000 in coming weeks. But global market have to be stable for that. Hence, it is not a blind buy situation as market volatility has spiked sharply with the India VIX surging by 46%. The 23,200 mark of Nifty acts as immediate resistance. Given the prevailing uncertainty and sharp swings, traders and investors are advised to pick stocks with good results and those which are nicely placed fundamentally and economically. That's all for today. Wishing you a profitable trading week ahead. Thank you.